looking at the composition of the people he has around him, is likely that not much government expenditures will be cut. Because in a democracy, the tragedy is that people like the policies that lead to inflation. They lack subsidies. Musk lives from subsidies from the government. It's a joke. Now they put him in charge of cutting government expenditures. Do you think he's gonna cut the subsidies that the government pays to him? Let's say you have 3 children. You also like the government to give you children's allowances. But I don't like it. I don't think that the government should pay for children. The households should pay for children by man or the woman going to work. It's not the business of government to distribute money to families. I'm also, to a large extent, against Social Security. I believe that families should look after themselves. They should save during their lives, and that will give them more freedom. The moment you accept government's money, you accept the authority of the government, that the government should tell you what to do. That is the problem. In the heydays of Hong Kong, the place thrived because people were responsible for themselves. And of course, some people suffered more than others, and some people became less rich than others. But this is the foundation of capitalism, that there is competition and that the fittest moves up and incompetent people go bankrupt. And once the government bails out bankrupt companies, you introduce a principle of socialism into the equation. And central banks are also an instrument of the socialists, where the government plans where credit goes and how much and so forth. The whole expansion of the government in America and in Europe was only possible because of central banks that financed the government's expenditures. Look at the 19th century. Why did people go to America? Because the labor opportunities were better than in Europe. The labor conditions were better than in Europe. And what do the Americans do? They talk about the robber barons all the time, when this was the period during which America became rich. But it was tough, but in Europe it was tougher. That's why they left Europe and came to the US. But not to get Social Security benefits. There was no Social Security. They came to America to work. And that should be told to all the migrants. You are welcome to America, but you work. We are in recession. Monetary inflation distorts many things. The fact that close to 70% of households live paycheck to paycheck tells me that the economy is weak. In real terms, your salary goes up, say, 4%, but your cost of living goes up 8%. So are you richer or poorer? And I'm not exaggerating. Ordinary people are struggling, but ordinary people are never interviewed on CNBC and on Fox News and so forth. They have no voice. So the elite can tell the public, oh, the economy is doing well. This is the problem of monetary inflation. It creates huge wealth inequalities and concentration of wealth. There is a book, and it was written by a professor, and he wrote The Economics of Inflation. The author is Constantino Bresciano Turoni, you can see. And he describes the impact of monetary inflation on everything, on stock prices, on the foreign exchange, on the gold price, and on society, and on the concentration of industries. During high monetary inflation, concentration of industry takes place. And there are fewer companies, but more powerful companies. And what then happens is complex, but if people are really interested in the subject, this is essentially what happens. And it's explained in Capitalism, Socialism and Democracy by Schumpeter. And he described how capitalism will inevitably lead to socialism. Because the rich people actually like socialism, because the socialists can be bribed. You can pay off the socialists. And then the academics, they also are all left. The few exceptions are usually kicked out of universities. And why are they left? Has a lot to do, and the whole socialist ideology has a lot to do with envy. They want to become rich by taking away the wealth that people accumulated partially through hard work and partially through the Federal Reserve. You look at all the successful entrepreneurs, Sam Walton and Marcus and so forth. Do you think these people were doing nothing on Sundays or Saturdays? They worked their A off 24 hours a day and 360 days a year. And now you talk to entrepreneurs, they all tell me it's very difficult to hire people in Europe who want to work. But today's generation, I know a lot about it because I have a woke daughter. She'll do anything except work. Most people say that when stocks go up, we are in a bull market for stocks. When the prices of homes go up, they say we are in a bull market for homes. But when the price of potato, tomatoes, and the chicken, they say this is inflation. Every price increase is a symptom of inflation, and the cause of that price increase are fiscal deficits and money printing. In one case, the money that Fed and the Treasury print flows into assets, and the prices of assets go up. We call this asset inflation. And then in other cases, it flows into goods like agricultural commodities, food, and into services like insurance premiums. The Federal Reserve, by the way, based on the Bureau of Labor Statistics, has healthcare prices going down for 3 years in a row. I don't know anyone in the whole world that pays less for healthcare than 3 years ago. It's a complete fraud what the Bureau of Labor Statistics publishes. I've seen insurance premiums. They went up by 100% in 3 years. It's actually an insult to the sanity of ordinary people. We have 1981, and in the case of stocks, August 82, a bull market in asset prices. You know, everything is more expensive. Home prices went up irregularly, but today, home prices are much higher than they were in 2007 in the last housing bubble. I think this asset inflation is coming now to an end. In other words, valuations are high and optimism is running rampant. Never before have people expected stocks to be higher in a year's time than now. People are bullish. They mortgage everything to buy stocks. They take the most speculative aspect of the market. Anyway, the consumer price inflation is going to accelerate. In other words, the cost of living will keep on going up. I'm a shareholder of a hotel. What do? The occupancy is down, they increase prices. It's crazy. You know, when I see the ticket prices of Disney, what it costs for a family to go. I used to do a lot of snow skiing and ski racing. When I think of how much it costs nowadays to stay in a hotel, go with your family, 2 children up the mountain, daily cards, and eat in the restaurants and come down. Only rich people can afford to do it regularly. Most people, their standards of living are down. They have to downsize. I do not change my allocation dramatically from one year to another. I tend to have about 25% of my assets in real estate. Maybe this has come down a bit over the last 2 years because real estate prices didn't go up. And in some cases, my stocks went down like REITs, but they started now to sort of bottom out. And then I have 25% in stocks and 25% in cash and bonds and 25% in precious metals. That doesn't change dramatically. Now, can one asset class go to 30% and another down to 20% and so forth? Yes, but I don't change meaningfully because I have enough money and I don't need more, and I'm content with what I have. At my age, you're more concerned about surviving. So when I drive my motorcycles, it's not anymore about going from A to B as fast as possible, but to arrive. We have to admit that we know actually very little about the past. The history has been written by historians, and the historians, they are biased, either Americans or British or German or Russian and so forth. Each one has a different story to tell. About the present, we are misinformed by the media, and about the future, we know nothing. So many things can happen. I mean, I have well-informed friends They think that America and Israel will attack Iran shortly. If that happens, I suppose that oil prices will go up. That would be an assumption that it would be reasonable. And in view of not knowing how the world will look in 5 years or tomorrow or whenever, I recommend people to be diversified, to have some assets, real assets, and some financial assets. I de-emphasize financial assets, and I can explain you why. Say the gold price is at the close to a high, but what have the paper done? The shares, they've moved nowhere. They've actually underperformed everything. So people who buy gold, they buy it as a safety measure because they hold something and they avoid the paper. For the paper, they buy Nvidia and Tesla. In investments, we have to be now very careful because two scenarios may emerge. One is, say, the scenario after 2000. When the Nasdaq broke, it brought down everything in the world. Not for a long time, but for 2 years, everything went down. And then the mining stocks and the commodity cycle was turning up and commodity-related stocks did well. Or we could be in 89. Japan was the dominant market. 50% of the stock market capitalization in the world were Japanese stocks. And Japanese stocks went down. I thought at the time they would drag down everything, but not so. I was wrong. The money flowed out of Japan into other markets, notably into tech stocks in America. Between 1990 and 2000, tech stocks went bananas. So you and I, we don't really know. And I'm too old to go and work as a waiter. So I've had to stay in good financial conditions.